Welcome to Brave Dynamics. This is your host, Jeremy Au. Leadership is harder than it looks. As a proven founder and Harvard MBA, I interview courageous entrepreneurs, executives, and investors every week. I also share my frontline experiences, coaching insights, and own professional development journey. If you're stepping up as a new leader, founding a startup, or venturing into the great unknown, this is the podcast for you.
Hey, Eddy, good to see you.
Thanks, Jeremy. Really appreciate you having me on the podcast.
It's an absolute pleasure because I first got to know you right before the pandemic in Harvard, hearing you share about why you're so excited for Indonesia. Breath of fresh air to hear you speak back then at Harvard Business School. And now I'm glad to be reconnecting with you and getting to share your personal journey and your insights with the broad audience.
Sure, I really appreciate it. That was my last flight, in fact. My last trip was in Boston with you and a number of the Indonesians on campus, and got back here March 2nd, and the world is in San Francisco. The world's kind of been shut down.
The end is in sight. Hopefully not the end of the world, but the end of this lockdown and with the vaccines coming. I always joke like pandemic plus a rush vaccine equals like the start of every zombie apocalypse of origin story. It is what it is, right? Yeah. So for those who don't know you yet, why don't you share a little bit about yourself?
Certainly. So I'm more than happy to share a little bit about my background and kind of what brought me to today with our Indonesia-Only independent venture firm. So personally, I was born in San Francisco 40 or so years ago in the late 70s. Right around that time, after water, food, and shelter had been solved in Taiwan, Korea, and Israel, those countries sent the largest volume of grad students in the world to the United States. So that applies to my parents, as my parents are both 10 generations each from Taiwan. So they took a lot of the learnings they had studying the United States. And the 80s, I had the fortune to grow up in each of Silicon Valley and Taiwan, back in Hsinchu Science Park, where companies like, TSMC, founded by Morris Chang, that grew up in Taiwan, had the chance to go to MIT, was at Texas Instruments, took some of that know-how and went back in the 80s to really build out the tech ecosystem, my hometown of Hsinchu, where TSMC, as we all know, today is, arguably one of the top 10 most valuable companies in the world by equity market cap. So I certainly saw, Taiwan's technology ecosystem really get transformed and really pushed by a lot of this, what we call sea turtles. In Chinese, we call them haikui. At Intudo, we've been credited with rebranding it as Southeast Asia turtle to some extent. In that case, I saw it firsthand in Taiwan with my parents in my hometown. Certainly saw that in Israel, about 80 or so researchers moving back in the 80s, together with a number of Russian Jews, et cetera, really, propping up that ecosystem together with the in-country talent. And of course, to some extent in Korea. So in the 80s, got a flavor for that. In the 90s, I moved back to the United States, got my initial exposure to, I would say, really venture capital in each of high school and in college. I had the privilege to work at, what I think is the leading bank covering technology companies, at least on the commercial side and venture debt side, with Silicon Valley Bank at a very young age. My first paid internship back then, I think it was $15 an hour or so. And also had the privilege to work at one of the leading technology investment banks called Montgomery Securities, which was one of the four horsemen back in the 90s, along with Alex Brown, Hambrick and Quist, as well as Robbie Stevens. So I had the privilege to do that. Also had the fortune to work at a venture firm while I was in my days in high school and college. I was backed by a number of Asian governments and technology conglomerates out of Asia. And I think that's really what really changed my life, in that back then, a lot of these, if you will, financial conglomerates did not have exposure to online banking. So back then they didn't call it fintech. Today, they call it fintech made last decade, but 20 years ago, it was called online banking or online finance. Through that, the person I had the fortune, once again, going back to Serendipity, which is part of our firm name, the gentleman that I had a chance to work with at Silicon Valley Bank connected me with the founders of PayPal. And so I had the fortune to work with the founding team there on an investment into the business. Ultimately, I had the fortune to help with some of PayPal's efforts in Asia. Ultimately, PayPal went public, sold to eBay, in 2003. Peter and the team started a firm called Founders Fund that had the privilege to be a small investor in all these years. And today, Founders Fund, along with about 25 other of the top VC funds or the founding partners thereof in Silicon Valley, have deployed capital into Intudo Ventures really to attack the Indonesia market. Similarly, at the time, Peter had the chance to start another called Palantir. So I've really been fortunate that a number of the founders and execs there have been part of our journey here at Intudo. And then Elon, of course, did companies like SolarCity, Tesla, and SpaceX. So we got some exposure there. And then last but not least, of course, with a firm as well. So with Max and the team there. So it's been a pretty incredible ride. After undergrad, I had the chance to do banking, traditional route in New York and San Francisco. Learned a lot there through my analyst friends. We had about a 100-person analyst class, 10 of which are still best friends forever that we are, very close dialogue with. And then I actually went to law school out in DC at Georgetown. I was in a global law scholar program where they took, call it 1 to 2 students a year focused on China. So once again, this comes back to the sea turtles. I really had a kind of firsthand front row seat to really see China's venture ecosystem. Call it from the early 2000s, where you look in 2000, you had Sina, Sohu, and Eddys go public, which were folks in large part that went to Dartmouth and Stanford. Once again, folks that grew up in China, had very great understanding in market, get a little bit of a global exposure, very sensitive to call it best practice, but I call it global exposure. And then in turn, go back and take a lot of the learnings and pair that with a lot of the in-country talent to really launch those businesses. 2003, we of course saw, C-Trip list, which was Neil Shen out of Yale. And then 0405, of course, you had, Baidu list with Robin Lee out of, Buffalo. So really sea turtles, once again, I saw did make a, pretty big impact on Chinese tech ecosystem, once again, early days. But I kid you not, you get to call it '08, you end up having kind of, if you will, two parties, right? You call it Bentu Pai or, Haigui Pai. So sea turtle or call it, local. So I feel really ecosystems take a lot of learnings from, sea turtles, but over time, as those ecosystems scale, if you will, the next generation talent certainly does come out of those next generation unicorn companies, Baidu, Alibaba, Tencent, JD, et cetera. So I really had a front row seat covering 0304, the Valley VC start learning about a place called China. They make their maiden voyages. 040506, they start their first vintages of funds. You know the names, Sequoia, China, Matrix, kind of, et cetera. Many of which I had the fortune, to represent in my capacity as lawyer when I was based in Hong Kong, Shanghai, and Beijing at a firm called Morrison & Forster. Come 2010-11, though, I will say a lot of my clients started looking at Southeast Asia, Indonesia in particular, certainly private equity funds, certainly a lot of the major banks. Frankly, at the time, I think 2011, 12, it was really the inception of the venture ecosystem in Indonesia. Some dear friends of ours that are pioneers in the ecosystem started deploying capital. And I thought at the time, call it 40, 50 million people on the internet. Today in Indonesia, I kid you not, it's 200 million people on the internet, fastest internet going country in the world that call it 19% year-over-year growth. India's clocking at 12%. US or China's clocking it at 1%. US, Korea, Japan, developed markets, almost zero. So it was really exciting. I saw that. And of course, growing up, certainly, in Taiwan, 1% of the population of, Taiwan is Indonesian. So call it 240,000 Indonesians in Taiwan. So had a little bit of exposure there. I didn't move on my thesis at that point, to be frank. Maybe I thought it was a little on the early side. After investing for over a decade, doing banking, doing law, really call it more 10, 20,000, 30,000 feet, experience. I thought it was critical to get more operating experience. So, with kind of a lifelong goal that if I wanted to be a founder or to be an investor with credibility and sit across from that founder and really, really be able to kind of sympathize with them and understand what they're going through is critical for to get more hand-to-hand, operating experience. So I moved back to Silicon Valley. I joined a company that was a client of mine in the robotics space. So identical board to Palantir. So I had a chance to kind of get the company close to, profitability, put, some other, executives in place. And then together with some of the founders there, I really had the privilege to be a founder of my first company in Silicon Valley, a smart home Internet of Things company focused both on safety solutions as well as call it heating solutions in both the United States as well as in Europe. So we had a chance to, raise a substantial amount of venture financing, call it $40 million, went to a couple thousand retail stores in the United States. So call it Best Buy, Amazon, kind of Lowe's, et cetera. Signed a number of enterprise contracts, both in Europe, Asia, Silicon Valley, with Comcast, et cetera. Put more of a gray hair CEO, if you will, in place in 2015, a couple of years into it, somebody had, taken public company roles. And really that's getting back to the word serendipity. Serendipity really brought me to Indonesia. I got a phone call from one, if not my best friend in Hong Kong, saying, "Hey, Eddy, you really should talk to my college roommate from 20 years ago that is kind of transitioning out of Goldman Sachs, having set up Goldman Sachs Investment Partners private equity and venture capital practice in Indonesia, given that he's multi-generation Indonesian. He's looking at doing deals in Indonesia and globally. You guys might hit it off." So we had the fortune to have this phone call, if you will. Thereafter, had the chance to continue our dialogue in 2015 and 16, spend some time in person, both in Silicon Valley as well as in Indonesia, run some of our own money on our balance sheet to really get to know each other. It's not that we just met and decided just to go, start a fund. I feel starting any company is really a journey. The average lifetime of being a co-founder with somebody, whether it be a fund or a company or just an LP in a fund, is longer than the average marriage in most countries. The US is clocking it at 8 years. So, a typical fund life for early stages, 10 plus 1 plus 1. In our case, it's 8 plus 1 plus 1. Similarly with a company, right? I mean, you look at Palantir going out after 17 years, Airbnb after 12 years. So you really got to really know what you're signing up for. So we had the fortune to really do hundreds of founder interviews over the course of, call it, a year and a half, along with our other co-founder, Tim, that's a multi-generational kind of friend of ours. And in that case, he had brought an OTT platform in Indonesia and found that he had more user base in, call it, 1 or 2 years than several years in Taiwan. So, really telling me that, hey, there's a parallel in that, at least when we look at Starbucks, I mean, it made no sense to us. People are paying the same amount for a Starbucks in Jakarta, an office building. We would have seen, in Silicon Valley, although call it GDP per capita is, call it, 10 cents on the dollar, and could be a function of kind of millennial consumption, et cetera. But it was similar parallel to what we saw in China in the late 90s, where Starbucks went in together with one of Intudo's named LPs to set up shop in a JV, where I kid you not, in Shanghai and Beijing, I thought it was crazy when I used to spend time out there, that once again, similarly, a 10-to-1 ratio, if not more, 15-to-1 ratio on GDP per capita. But that same person, I kid you not, is spending that money, spending $30, $40, call it 5% of disposable income on Starbucks. So seeing that, we were very encouraged. And, Indonesia being really a domestic consumption driven country, with 60% of the country's GDP driven by domestic consumption, more akin to like the United States, it was very encouraging. So 15, 16 ran money on our own respective balance sheets. I think really that's what gave birth to Intudo Ventures, in that, I kid you not, 15, 16, we started seeing our first unicorns. 2011 to 2016 was really internet 1.0. You had companies like Gojek and RideHail. You had, Traveloka and OTA. Certainly we saw, Tokopedia, and, you saw Gojek's round really that summer of 2016 with 550 million coming in, with a lot of the global guys, KKR, call it, Warburg, kind of, et cetera, that really put kind of Indonesia on the map, if you will. So when we came into the market, call it in early 2017, to launch our first fund, I do feel that we had to go in with a very differentiated strategy. And looking back at it, really that is what formed Intudo Ventures. So Intudo really embodies kind of the core principles or values of the three founders, where integrity, sincerity with an appreciation for serendipity. In the Bahasa Indonesian language, it's integritas tulus jodoh. And if you put that together, you get Intudo. I think the thought was really to build a platform long lasting that would hopefully last multi-generations, multiple funds, if not generation, and survive generational transfer. We're a little, very hesitant to, name a firm after ourselves. We may die, or, at some point, assuming, we don't have eternal life, or also naming it after something. It really pulls us back in, whether it be in the US in a developed country or in a developing country, I'd argue, there always is a tendency, particularly when you're investing very long term, to have a desire maybe to take shortcuts. And, I'd be lying if I said I haven't from time to time. But really in those moments, I think these core values bring us back and kind of keep us in check, whether it be at the Intudo level or, at the portfolio company level. So that's our name. And in terms of differentiation, I think that looking through it really comes back to what we call the 3 Ins of Intudo. A, we're Indonesia-only. And I think that runs contrary to, what we see a lot in the market. And I think a Southeast Asia regional mandate, I think, is a brilliant idea. Call it in 2011, 12, 13, 14, 15. I really credit a lot of the pioneers in the ecosystem, as well as the investor base, really, encouraging these funds to kick off. But we did find, call it by 2017, that honestly, that in order to really build at least a consumer-facing business, that Indonesia was kind of a critical part of our mandate as any company, that you'd kind of almost have to come in market, unless you're a Vietnam-only company, and raise a Series B. You wouldn't be able to even raise a Series B. I call it a $10 million equity financing, given that it represents 45% of the population of Southeast Asia. But on top of that, I'd argue, you take the next 3 countries combined, it doesn't hit that scale from a population. But some may argue it's poor, but I'd actually dive deep and argue that from a GDP per capita perspective, you add Philippines in, it's actually, a little bit lower. You add in Vietnam, even lower. You add in as well as Thailand, and that Indonesia itself represented, call it, more than the next 3 countries combined from an online commerce perspective. So we felt that the path to becoming a unicorn required that you came through Indonesia. So in light of that, we decided to take an approach of called Indonesia-only, and that we would exclusively back Indonesian homegrown companies. And I think that was very special. Overnight, we were able to wipe out, call it 70% of the companies in the market that we could just overnight not have to meet, which I thought was very, very, very special. Secondly, we decided it's very critical to be an independent fund. And the reason I say that, looking in market, we had a feeling that the overwhelming majority, if not all the funds, were heavily anchored by, call it 1 or 2, if not 3 major families. We call it single conglomerate affiliation risk. And we don't think that's very much of an issue at, call it, late stage. But in our founder interviews, we found that many founders, often were concerned at too early in a process. In a country, you may say, are dominated by 50 to 100 families. You work with group A, it may be challenger work group B, C, D, F, G. So we thought it was mission critical to build this independent identity such that Intudo, the founding team, really is the biggest investor in each of our first and second vehicle to make it clear that, we stand the most to lose financially, but more so our time, but also that ultimately to the founder that, what they're getting is that there's no ulterior motives, if you will. So that independence really is, really worked to our advantage. And lastly, I think this involved strategy, and we're able to be involved because my co-founder Patrick and our 6 associates, all of which are multi-generation Indonesians, sit in Jakarta every day of the week, as opposed to being spread across 6 or 7 countries. And then B, we run a very concentrated strategy. I'd argue maybe the most concentrated strategy in the market, more like a private equity fund. And time will tell if this is right or wrong. Ask me in 8 to 10 years. But in light of that, we do call it 1 deal a quarter, 4 to 6 deals at most a year. In 4 years in the aggregate, we've done a total of 22 investments. So we can put all our resources in one market, day in, day out. And I think that's really out there and, very controversial. But I think if you were to ask anyone in 2021, one would argue it's not that we had a crystal ball, that maybe we did the right thing, and that I'm not saying I predicted COVID, but ultimately throughout COVID, we realized that we almost became the only game in town. In that, in country, we all say in Chinese, 人心不足近邻, in that if you have a fire, your neighbor is the one that's going to save you, not your blood relative like Eddy Chan. I'm not going to be able to fly into Jakarta and save my team. I think being the only investor in the market really benefited us, during that process, and really being that in-country first responder. I think the independence really worked in that most managers, often, heavily anchored by 1 or 2 major families, they had to go focus on their core business, whether it be a palm oil, call it, retail, residential. Maybe VC wasn't preeminent there. So we could continue just being very disciplined in good times and bad times, just investing at an even keel. And the last piece of being involved really worked in that a lot of more index fund-based investors had, call it, 50, 100, 200 companies across 6 or 7 countries that they might not speak the local language. We were able to really, support, given that we have a grand total of 20 companies, all of which sit in one market. So yeah, so that's kind of what brings us today. I know it's quite long-winded. We've really, enjoyed our time, and I'm very grateful for you having me on the podcast.
Yeah, amazing. There's a lot to unpack there. So, we're going to go slice this and dive a little bit into each one of them. I think you mentioned 3 major parameters, right? I think the first, obviously, is your personal journey and so forth. And then the second being Indonesia as a market. And then thirdly, of course, how your firm approach is different from other VCs in the region. Let's just go straight to, say, look at Indonesia as a market, and then we'll kind of go through it and talk about your personal life as part of it. Why is Indonesia interesting? So, you mentioned GDP per capita, you mentioned digitization, but what's the essence of it? Is it like the dream that it's like the biggest Southeast Asian country in Southeast Asia? Is it because it's got a scale in the domestic economy? What exactly is it that makes you choose Indonesia, I think, across all geographies? There's Africa, there's LATAM still is emerging. So what is it about Indonesia itself? Yeah.
Yeah, so honestly, I think that getting back into it, I had the fortune to really see once water, food, and shelter gets played out, in any country, often, you start, once you have what your bare needs, you start buying kind of what you want. I would say I saw that firsthand growing up in Taiwan, call it in the 70s and 80s, certainly Taiwan, Korea, called Israel, Asian tigers. We certainly saw that in the late 90s and 2000s. With respect to Indonesia, once again, I think it's just kind of, if you will, pattern recognition and serendipity. I'm not saying that I had the foresight. It was really that phone call, very unbeknownst to me, that brought me to Indonesia. It's not that, I was sitting around just thinking, hey, when am I going to return to Indonesia? It was really a phone call. I happened to be at the right place at the right time. Just the stars aligned. If you look at population, certainly, I don't want to bore, the viewership with the details, as they're probably more familiar than even myself. Call it 70% of people are younger than 40. It's the inverse of what we're seeing in developed markets. Call it China, Taiwan, Hong Kong, United States. It's the inverse pyramid. So I think, yes, demographics are very exciting. People call it mobile first. I'd argue it's mobile only. You see a lot of countries where the US, you had cash, you had traveler checks, then credit card, then maybe digital payment. I think in China, you probably skipped, call it checks, or skipped maybe even credit card and went straight to digital payment. I'd argue in Indonesia, we probably skipped credit card, iPad, tablets, and then went straight to mobile. So mobile only in that respect. And then secondly, went straight to, digital payments, if you will, right? So I do think that, those macro factors are very interesting. But I do feel, for us, if I were to look across Southeast Asia more broadly, I'd argue the path to, becoming a unicorn or decacorn for sure goes through Indonesia. You can ask Grab, you can ask almost anyone. If they're not, going there by Series B, I think it's almost unrealistic to raise a Series B. So I think in that case, as opposed to, I think it's possible to run a regional strategy, but I just feel that that requires massive AUM, in that if you need world-class, I describe it like a buffet. It's 8 different languages, family power structures, regulatory, kind of, et cetera. And to call it, a region, I think is oversimplifying it. EU, arguably there's a regulatory body. I would say ASEAN, it's more a loosely affiliated program, if you will. And so I think that's step one. And to say that, Spain's the same as the UK, I think is quite an overstatement. So ultimately, the way I would describe it today is to say that you're going to cover Indonesia from Singapore is akin to saying that you're going to cover Silicon Valley from Chicago, except there's different language, family power structure, and regulatory. And I'd argue you could do that maybe in 1971, but not after 1972, after Kleiner Perkins opened its office on Sand Hill Road. And so similarly, I think that if there's that underappreciation where, I kid you not, you'll need a world-class chef to cook, nasi goreng. You'll need a world-class chef to cook pad thai, a world-class chef to cook Vietnamese pho, a world-class chef to cook Singapore chili crab. Otherwise, my sense, if you don't have the right AUM and the right approach where, one-size-fits-all approach, is you're going to end up running a very mediocre third-tier food court and a third-tier strip mall where, Eddy Chan's the one cooking the Guatemalan food, and the Guatemalan's going to be cooking the Japanese food. It just doesn't work that way. And so that's my ultimate feedback, is that do less better. It is a market today, at least in Southeast Asia, we've seen the only other markets that generate unicorn-facing companies are more in the consumer space. Maybe in Vietnam, you've seen a handful of them, but for the most part, it's an Indonesia-only strategy or a regional strategy with Indonesia being the core. Whether you look at Shopee, you look at almost every company would be my feedback. So if you're asking me why Indonesia-only, that's the reason. Also, that's where we're strong. That's because my co-founder's been there for multi-generation, setting up Goldman Sachs' efforts in 2012. It's my 6 associates, all of which grew up in markets, studied abroad, and came back. And so that'd be my thesis. And if I look at early dynamics, getting back into it, if you look at the majority of Indonesian unicorns, similar telltale signs in that it was often folks that grew up in market, had the chance to go abroad and then come back. I mean, you look at, where you went to school at HBS, where I think there's 3 Indonesian companies in the last 3 years. We've been privileged to be the lead investor on the board of every single one of them, focused on Indonesia. You look in 2011, certainly with a lot of local heroes, whether it be Nadim, certainly with, Ferry Nardi, with Anthony over at Grab. So we've really been, saw that firsthand. I think a very telling statistic is that 92% of companies with a valuation over 100 million Indonesian technology have a founding team member had exposure to the United States. So I think that's pretty interesting. If you look at Intudo, I would say, 95% of our businesses, have a founder that got, global exposure. Well, I'm not saying it's a prerequisite. Certainly there's been some incredible companies, and we really like that mix, if you will. Founders that got global experience and came back, and then also folks that maybe have stayed more also throughout their career in country, so they didn't miss the last couple of years of development. And we pair that, and it's really kind of magical. So, in my last comment, I think that why we think this strategy at least works for us, and I'm not saying it's perfect for everyone, is that no one realizes this, but Indonesia, maybe 45% of the population is Southeast Asia, if you will, by population. In terms of students in the United States, Indonesia is maybe the most underexed market in the world for students in America. And I'll draw an example. Last year in grad school in America, there's a grand total of approximately 1,600 Indonesians enrolled. Okay, if you look at on a per capita basis, Singapore, which is a country of 1/50th the size, had approximately 1,400 something. So ultimately, it's a 50-to-1 ratio. So Indonesians represent 45% of the population in Southeast Asia, but they only represent 10%. I kid you not, 10% of the Southeast Asians in America. So if you run a strategy, getting back to it, where you want to work with a lot of the talent, let's say globally, where, like I said, 1 in 3 of Intudo's companies, no one realizes this, is actually sourced in the United States. In light of that, we are the only firm, as far as I understand, that invests early stage of Southeast Asia that has somebody like myself that spends more than half my time in the United States on campuses like where you went to school. HBS, every year for the last 3-4 years, Harvard HBS Conference, Intudo is a sponsor. Actually, it's the sole VC sponsor generally outside of global firms like GGV and others. And then also, speaker every year. So we have the privilege to really build long-term relationships, very for the long haul. People that want to be founders, if they want to after a couple of years, we work with them, bring them back and deploy. We back to 2019 Indonesian. They're doing a wonderful business in market. We back to 2018. That's a dear friend of yours, Levy in the genetic space. We back to 2017. Similarly out of GSB. And I think that the moral of the story is that if you run a Southeast Asia strategy, if you hold an event, you have to beat 10x the volume of people. So it's very not focused in that. I'd argue maybe the Vietnamese person may not be interested in what's going on in Indonesia. The Singaporean might not be. So I think it's just Indonesians, I kid you not, like I said, 1,600 versus Singaporeans. So when I hold an event, arguably, 100% of the people are Indonesian, focused on technology. I've been to many Southeast Asia events that, not because they're not great, I really enjoy them, that you meet people of all different ages, from all different countries. Half the time they're there to meet a boyfriend or girlfriend. Maybe others want to, get free food. And ultimately it just ends up being, not very directed into a kind of a epic fail, if I describe it. And I've talked to many managers that ran a program, and they're very frustrated in that the quality of constituents at these events is not very good. I'd recommend that they run, even though they run a regional mandate, they should adopt just cut it into Vietnam only night, whatever. I know I'm not trying to be overly exclusive, but ultimately it ends up just not being really good for anyone. And that's my thesis why this strategy works, and that I can show up on campus at HBS. Generally, there's 2 to 4 Indonesians a year. In one dinner in March last year, the night after I saw you, I had every single Indonesian in the whole school there. Grand total 2 undergrads, all at the dinner. A grand total of 7 HBS people, all at the dinner in one sitting. Whereas you run that strategy with China, where it's 100x the volume of people in America. At HBS, it's 90 people a year. I could be there for a month, and not meet all of them. Singaporean, similarly. So hence, yeah, that's our Indonesia rationale. It's our own strategy, and in part, it's just a numbers game. If I try to run a Southeast Asia strategy, I could spend the whole year just meeting people.
Yeah. So just to paraphrase that, I think you saw that obviously lots of emerging markets, but you have a conviction that Indonesia is at an inflection point where there's a ton of great opportunities and great unicorns that are waiting to be built. Secondly, you saw the opportunity to build a concentrated strategy where you have personal connections and professional certainty around how to do so. And then thirdly, I think you saw the angle around talent as well, which is actually relatively unique. So I think there's something interesting here, right? Which is that lots of people are thinking about Southeast Asia, lots of people are thinking about Indonesia. And even today, I think we see like even more and more US and Chinese companies that are coming to the region, right? They're setting up shop in Singapore, they're setting up shop in Indonesia. So I'm just kind of curious, like what are common, myths that they have that you like to clear up? I know you mentioned one of them, Southeast Asia is not Southeast Asia, but what advice would you normally give to them to clarify things so that they don't go off and start on the wrong foot?
Yeah, so I would really, this is not rocket science getting back into it. It's just really taking a very hyper local mindset paired with a global mindset and getting back into it. I think that, we've taken a position that Southeast Asia is a fallacy at early stage. I'm not saying like for growth investors, I kid you not, if you can write a $20 million ticket, be my guest, sit in Antarctica, you can cover all the deals. Because like I said, the Indonesian venture ecosystem, keep in mind, in 2017 in January, when we launched, around the time we launched Intudo Fund 1, there was a grand total of 15 companies. I kid you not, 15 companies had a valuation above 25 million. 2 years later, when we launched our second fund that's focused on Series A, there's a grand total of 30 companies with a valuation over 25 million in Indonesia. 2 years later, the ecosystem's doubled. So I call it, it's doubling every 2 years. So it's kind of like, rule of 72 divided by 2. So that's very encouraging. Now, in terms of the global majors coming in, absolutely. In the quest for growth, every single business in excess of 500 million, as we all know, has taken kind of a side in the Chinese proxy wars. Call it Ali SoftBank, call it Tencent, JD, Meituan. We're certainly seeing the US majors, as you alluded to, certainly Google taking positions, Wikipedia, as well as Gojek, Facebook, kind of, et cetera. I don't want to, belabor the details. But getting back to it, I think that you really got to cut it and be hyper local. It's not about money. Like, how much money you have, our technology is better. You really got to understand on the ground combat. I really parallels to the Vietnam War. Like, is there a doubt that the United States technology was superior to Vietnam in like the 1960s and 70s in like, warfare? Was there a doubt about capital? Anything that requires on the ground combat, it's very easy to underestimate what you're getting into. Whether it be my dear friends that, were former Uber GMs, that, I've worked with out of Cargo, out of, Beam, et cetera. It's very easy to underestimate, the need to take cash versus, only be able to take credit card. And also, Southeast Asia, is a fallacy, and that's 8 different markets, family power structures, and regulatory. So just plopping into Singapore or whatever, once you go into these countries, there's a lot of business models that do not travel well, particularly when you talk about regulation. Particularly fintech businesses, in my experience, don't travel too well. And that there's different regulatory regimes in country in Indonesia. If you want to get a crypto license, if you want to get a brokerage license, you want to get an insurance license, like, a lot of the business that I love to invest in have beautiful regulatory moats. Think of PasarPolis and insurance. Think of a crypto business that we did that's still undisclosed. Think of a lot of OJK business in the P2P space, where I would say finance businesses generally don't travel too well. If it's purely over the internet, then I would argue yes, provided that you're not dealing with regulators that block you out, right? Think of China, for example, let's say in Indo, where yes, Facebook is dominant, right? Google is dominant. That's because you don't have an in-country situation where you're just blocking, the counterparty out. So, or look at India, for example, right? So Indonesia, what I've really enjoyed to see is that the government has been very forward-thinking from an omnibus bill perspective, really, making it more clear, what the capability on FDI. So encouraging the FDI, you see the sovereign fund now getting commitments from the United States, call from Japan, call from et cetera. So I do think that, for foreign companies to come in, A, Southeast Asia is a fallacy. B, I would really encourage them that Indonesia, to some extent, is not a homogenous market. Everyone talks about the glory stories about, rising middle class, mobile penetration, but you really got to dice the markets themselves. let's talk about Indonesia. We were very public about this at our annual meeting. We're really privileged to have hundreds of institutions join us globally, sovereign funds, fund of funds, kind of you name it. And the best thing that I came out of that after the annual meeting was getting many private phone calls saying, Eddy, I'm very grateful that you guys told us that Indonesia's not a 270 million person market. It's really what type of company you are. First is what we call the elites, call it 4 million people, 4 million people with about 134,000, 135,000 GDP. I'd run a parallel to Singapore. Okay, so you got the Singapore of Indonesia, right? Okay, so that I get. You can sell them certain high-end products, upper middle class. The next bucket is the next 50 million people. I'd argue that's called a 6,000 GDP, more akin to kind of Thailand as a whole. So once again, I'm not saying Thailand is that blended average. I'm sure there's different, you have to bifurcate that. So yes, most of my companies, I kid you not, for the most part, they can certainly service the 135,000 GDP. They can certainly, for the most part, service the 50 million GDP. The next bucket is the next 100 million people. So like call it the middle, not to the rising middle class, call it 1,200. Certainly, a lot of my businesses call it TaniHub, an agriculture marketplace, gets closer to the bottom of the pyramid. I think yes. And then the last bucket, which is what we call the bottom of the pyramid, which is called $800. That's kind of below kind of the global poverty line. Certainly encouraging, seeing some momentum there. But I would be really lying if I told you that all my companies can get actually down to the base of the pyramid. So, people telling you that it's a 270 million person market, if we sold one Coca-Cola to everyone there, it's really fictitious. So ultimately, the moral of the story, getting back to telling global players, is that don't just look at populations, don't look at like means. You got to look at medians. You got to bifurcate the market. And secondly, I think a lot of these ad-driven businesses, and I think I'd read this somewhere and heard, is that you talk about Facebook and Google, like about, oh my God, they're dominant, like, and a lot of people going, there's so many eyeballs there. We should run an ads-based business. And frankly, we're pretty skeptical to date. And it's not to say it'll never happen. Yes, there's a lot of eyeballs. Yes, people in Indonesia spend, call it 4 hours a day. A lot of Southeast Asia countries, top 10. But you should really, I would dive deep and understand the advertising revenue from a lot of these businesses. The whole TAM, I kid you not, for revenue in advertising, my understanding is digital advertising, about $800 million per year in Indonesia. And if you want to put that in context, I forgot the number. If it's Facebook plus Google and just kind of their ads, 100 some billion. So like Indonesia may be like a huge, like their third or fourth country. But in terms of like what they're monetizing on, whether it be Instagram, whatever, this is public news. I'm not sharing like new information. It's less than 1%. It's like a very small fraction. So I would encourage a lot of those, like a lot of the businesses ultimately we find have to be transactional to some state, like B2B businesses with very solid margins, or transactional marketplaces that ultimately, really are embedded finance companies that start as a transactional model, no different than a Square, understanding what your customer is, and then really getting, some, if you will, margin expansion by launching these kind of lending products in a market that, I don't need to belabor the details, lack of bank penetration with consumer level, or even in SME space where I call it out of 60 million SMEs, 2% have access to a bank account. So the moral story is that you really need to dig deep. Don't look at like the headline numbers that look all rosy. Almost 90% of investors are going to be telling the institutional investor that it's a 600 million person market. Indonesia's 270. It's not. Like sometimes I'd argue Indonesia's a 60 million person market. And you just got to tell it like it is. And that's the moral of the story.
Yeah, what you're saying is very true, and I agree with you. I think we saw that with China as well. I mean, a lot of companies entered China thinking and not realizing the difference between tier 1, tier 2, tier 3, tier 4. Of course, I always joke, like, I remember I was talking to American friends, and they're like, oh, we don't work with tier 2 cities. And I'm like, wait a moment, tier 2 cities is like as big as any city in America. So just hold up a moment, It's fine to have a tier 2 strategy. I think what you mean is you don't want to go for the tier 4 when you're thinking about what you're thinking about.
Look at India. I mean, like, I've read some great pieces by some investors I really respect where they call it India 1, India 2, where you call it $1.4 billion. You dive deep in India 1. I mean, I forgot, like I might be off by like kind of magnitude, but I think it's like 50 to 100 million people. Call India 2, maybe it's like 100, maybe I'm even overestimating, where people look at India and go, oh my God, it's $1 billion. Like, you got to realize that where your business is focused, and based on that, you make a determination what you should and shouldn't be doing. And if I were to even speak further about that, I look at India where it's 1.5 billion, but people don't realize, and this was a really telling statistic that, and maybe I'm wrong on this, but last I read, I'm under the impression that Indonesia's e-commerce market, they call it, I think it's 40 or 50 billion, is actually larger than India's today. No one realizes that, but that's another, I think, unique stat just to put out for everyone. So sometimes populations aren't necessarily are sometimes misleading is my feedback.
That's so easy to pull from World Bank, understood population number. Anyway, but talking about second order insights and going deeper here, right? There's a lot of people that I've met, Indonesians who are wanting to come back to Southeast Asia, and they've worked in some tech or something like that, and they're trying to understand. They're like, okay, I know tech in Indonesia is getting hot, but they don't really seem to understand like the universe of opportunities. So let's throw it out there. Like, how roughly? I mean, obviously we can pull this from Crunchbase, but let's say how many seed companies are coming out every year that someone could potentially join?
I talk about that a lot. So I saw a statistic, and once again, I'm not saying this is right or wrong. I saw a statistic, I think, that indicated there's about 2,000 startups in Indonesia. It may be wrong because, like, our model, we do one deal a quarter. So we're not in the business of like talking about our funnel. How many? I mean, if I want to publish the numbers, it's like 1,000. I get 1,000 to Eddy at IntudoVC.com or mail it Intudo VC. But in terms of like, companies that we think kind of are Series A-able in terms of like, we think that are legitimate, I would argue, getting back to my number today, there's about 60 companies with a valuation of 25 million or above in our book, that based on our understanding, looking at public insights as well as our own internal numbers, right? So if I were to look at it, Series A, I defined, which in 2017, I kid you not, it was a 1 to 3 million equity raise. In 2019, I called it a 3 to 6 million equity raise. Today, I call it a 5 to 12 million dollar equity raise, in large part because of flight to quality and that like the best companies, a lot more capital. And also our founders are being a lot more methodical, raising for longer runways, where historically, I kid you not, raising for maybe 9 to 18 months, which I'm not saying I believe in. But today, I think it's more of an 18 to call it 36-month runway. So a lot larger round size. So getting back to it, seed, I can't comment as well because we do 1 to 2 of those a year. To date, almost all of our seed deals have been sourced in the United States before any founders even step foot in Indonesia, which I think is extremely special. But at Series A, I can talk more credibly on. I think I would say at Series A, which I define as call it a $5 to $12 million equity raise. I would say per sector, per business model, there's probably 2 to 5 legit companies. I would say 3 to 5, depending on the sector. If it's a little bit busier, then maybe you're going to have call it 3 to 6. If it's a little bit more of a quieter sector, call it 2 to 4. So I would say that's how I would look at it. As I think about a lot of talent, I spend 2 months a year on campus. We built that social index, if you will, almost not all, but a lot of the most talented Indonesians in America. I mean, this is, if you look at the MBA programs where I focus, as well as corporate campuses, I would say the top 20 MBA programs in the United States, no one realizes this. This is like a hidden secret, and I'm very public about it. Graduate about 25 to 30 Indonesians per year. So it's not like there's a large volume. And I work with about 80% of them, kind of, insisting them in their career goals, whether it be joining a company in America or a company back in Indonesia, whether it be our portfolio or outside of our portfolio, with a very long-term view that if and when they're ready, they can, be a founder that we're their first phone call, right? So we place them in even unicorns because the HR heads at unicorns are buddies with us, and that when their top people come out, we're the first phone call, right? So I think at Series A, there's 2 to 4, 2 to 5 legit companies. To be frank, for a lot of my young friends, particularly in the US, at Google, at Facebook, at Splunk, at HBS, at GSP, I generally recommend them either if they want to start a company. We're very happy to work with them on developing product market fit. Like I said, we meet you, we get to know you, take you through the distribution channel. We have 20 or so families, hone that product. If that goes well, we give you a diamond ring, which is like a proposal, if you will. And if you shop that diamond, it's the ultimate test of character. We just walk from the deal. So fun too, we put out 9 term sheets. We want 8 on number 9, unfortunately, 3-month process. And that counterparty, I think ultimately just shop the term sheet, just gross underappreciation for value. So getting back to it, I would argue there's 2 to 4 companies at A. I think at B, there's generally 1 to 3, I would say, that are called undisputed category winners. So in Intudo, we do 2 to 3 Series A's a year. I feel pretty confident we choose the best company given our diligence methods run bottoms up. At B, we only invest in the category winner. I encourage most of the talent I find in the United States that's been kind of, let's say, in grad school, working, generally to join a Series B company or later. I just feel in terms of their ability to pay, not to say money means everything, but I feel those companies it won't be as much of a culture shock from a pricing perspective. Also, you see that rapid growth, just that skyrocketing growth where you're going to see a little bit of everything, which I think is extremely exciting. But I would say if you go too late, call it 500 million or a billion or C or D, then maybe it's too late where it's too compartmentalized. Now, if you go early, either be a founder where you get founder economics, or I would argue only join a company where they kind of make you a co-founder, and I have some brilliant examples of that. I think some, colleagues, classmates of yours, like, over at Aridify, for example, ended up joining and later on became co-founders. Similarly, another young man at GSP that, I've been, working with as well is also at that business that I know your firm, Aridify, also is, amongst those deployed in as well as Intudo. So I think that's how I encourage people on the early stage. Make sure that, you come on as a founder and really get that role. Otherwise, it's kind of a very bad outcome in that you join this early stage business, you feel you're taking a massive pay cut, you're super dedicated. The co-founder or the founders of the business, if you're not a founder, feel that, oh my God, I'm paying this person so much money, like I'm overpaying them. So both sides feel underappreciated. So I really feel that alignment in that if you are going back from the United States, I strongly, strongly encourage you either to join as a founder of a seed or A company or join a rocket ship company, call it Series B, where you come on maybe as a VP or whatever it may be, and really, take a lot of your learnings, if you will. I would encourage you, like seed and A, it's a little bit shaky. I think it could end up in very big disappointment unless you're there purely for the experience. In that case, yeah, make sure you're a founder. Otherwise, as a rank and file, I think there'll be a lot of disconnect and there'll be a lot of hurt feelings on both sides. No different than entering a marriage or a dating relationship that you're not ready for.
Yeah. I think based on what you just said and what I think, maybe there's about 100 seed, maybe like 20 Series A and 5 Series B financing every year. Do you feel like that's fair?
If we said in 2017, there's 15 in Indonesia. In 2019, from 17 to 18, probably additional 15 got funded. From 2019 to 2021, in the last 2 years, I'd say 30 companies got funded, graduated to Series A, graduated to 25 or million in valuation, which I find is like the post money for a Series A typically. So we are seeing, call it then, yeah. So 20 is fair number. I would say that on average, if assuming that it's not linear, right? It's kind of more parabolic. I would argue there's probably 20 new Series A's done a year. I mean, we personally in Intudo probably do 2 to 3 a year. We do 1 to 2 pre-A's, which are most often these sea turtle-like plays, or people coming out of companies in Indonesia, and then 1 to 2 call momentum-based, in Series B's that are into like what I call undisputed category winners. And getting back to it, I would also encourage a lot of people thinking about going back if they're going to join a Series B. In that case, then fine. Look at TAM. I get it. TAM, undisputed category winner, scaling margin integrity, terrific. Not like a who can burn more faster. But if you're looking at a seed or Series A company, particularly seed companies, I would really discourage you from reading too many reports and just believing what they say. Because when you read it in the research report, yes, it's true, but often the companies that are benefiting from that new trend, if you will, they're already in existence. They're already at like Series B, Series C. It's like saying like, hey, let's go set up a new OTT platform. Well, guess what? There's something called Netflix or, Catch Play already, right? It's too late. You know what I mean? And so I think that a lot of people get caught up in like reading a report. It's like when you read in like, I draw an example, like when you read in like CIO magazine, what's your big data strategy? Well, guess what? You know what? That means that like it's become commonplace in market. It's no longer a trend. It's like past. So the companies that benefit are, it's like saying like EV today. Yes, it's Tesla. It's not like, hey, let's go start an EV company tomorrow. Why? Because you're going to have like 10 non-independent thinking VCs, which, often, I hate to say it, a lot of investors, operate like sheep. They all want to play. Well, guess what? What's that mean? You're going to be competing on valuation. It's going to be very expensive. Secondly, you're going to be competing on talent. You're going to the same campuses, all the top Indonesian talent, where they be university campuses, corporate campuses. Oh, I read about that in Google Temasek. That's a hot. Let's go into education. Well, guess what? You're fighting for the same talent. So they're going to be expensive. And they might change just based on what comp package. So they're not that hungry. And lastly, at pre-A, you're going to be burning those VC dollars head to head against those other 10 companies on customer acquisition, Facebook, Google, offline, where I'd argue that's like the worst thing you can possibly be as a founder. Other than the fact you can raise money easy, your cost of capital is going to be higher in hiring people as well as in acquiring customers and competing against 10 people. As a venture investor, that's the worst of all worlds in that you're paying the highest valuation, the burn rate's the highest ever, and you're competing against it. Like, Peter Thiel all says that it's like competition is for losers. You know what I mean? Like to some extent, it's like at pre-A, like this is a learning from like seeing, how he's invested, not many others, is that at early stage, we exclusively invested in Intudo Ventures, unless we've known somebody for like 10 years. That might be different. In very non-consensus investing. It's like when we backed, for example, your classmate Levy over at Knowledge Genetics, where I kid you not, in 2018, 2017, people thought genetics were crazy. Who in their right mind would invest in a genetics business in Indonesia? But getting back to it, what do? We take our playbook, we ran it through the distribution channel in advance, made sure we got the right product market fit. Ultimately, each term sheet came to terms. And I kid you not, that business, on the back end, I'm not saying I predicted COVID. Every single Indonesian that's in America that wants to go back to Indonesia, we're the only game. You can't go to Gojek to work on genetics. You can't go to Grab. Just like when I backed Elon a decade ago, it's NASA or SpaceX. So you have to have a moat getting back to it when you're early because you can't win on money. So it's a technical moat in that it's genetics, knowledge genetics versus nothing, no choice. Cryptocurrency company versus no other crypto, no Gojek. Or it's big data company like Delmon, which is doing government contracts in government as well as in big data, as well as in what do you call enterprises, where It's Delmon versus nothing. And so the moral of the story, I would encourage anyone that wants to start a business in South, and maybe I'm wrong. It's, yes, it might be tougher to find an investor because maybe they think you're crazy, you're way too early. But not to say like just build a business to be differentiated, just to be different. That's borderline stupid. But I would encourage you focus on something where you do build a technical mode out the gate or a regulatory mode. You know what I mean? And that's really underappreciated. You see so many businesses in Southeast Asia that are so TAM driven. And I get it. At Series A and B, I do look at TAM. I'd be foolish otherwise not to look at it. But at an early stage, I'd argue most investors, at least myself, I'm not confident I'm going to choose the best out of, call it 5 to 10 companies focused on, call it SME enablement or whatever. Yeah.
Yeah, I think that's so true. And I love what you just said, which is like the differentiation between the TAM approach, which is, of course, everybody still has to do at the end of the day, but also looking at what you call the talent mode. And I remember Levy, good friends. I first met her, first year of HBS, and she's studied and trained at A-Star in Singapore, really smart, understands both business as well as the science, right? And I remember her pitching Nala Genetics in campus, and not many people in the States really understanding like Indonesia and genetics, and why not America genetics, right? Or Indonesia and something else, right? I'm glad you took a bet on her because, I think she's as strong as person to bet on than anyone.
She does something very special. I mean, you can just imagine the talent we meet. UCSF, top researchers, Indonesian background. They go back in town. Don't get me wrong, it might be for family reasons or whatever, but when they go back in town, I hate to say it, we're the only game in town. And we love working with these people and they feel rewarded. We just love, it's no different than like us getting behind companies in the crypto space when Bitcoin was 3,000. Everyone thought we're idiots, consensus-based investing. Oh, Bitcoin's 20,000, it's 3,000, it's stupid now. You should run for the hills, Eddie. I was like, no. The fact that this guy wants to do it so desperately and this guy's crazy. And there must be something behind it. Guess what? Bitcoin's 34. I'm not to say I foresaw that, but my feedback is when you do non-consensus investing and you're right on the back end, everyone just starts piling in on the back of it and you ride that momentum and you get the best entry valuation. You get a beautiful moat, given that you have a year or two head start. You run one of these TAM-driven models. Don't get me wrong, at late stage, at early stage, you're going to be continuing at 8 to 10. Not to say maybe it's not winner takes all. Maybe there'll be 2 to 3 winners, but it's very, very risky. You get in this very risky game, I call, of just like margin compression, where you look at all these other non-consensus businesses. Because we're the only game in town, we don't win based on price. We win based on, operational dependency on our product. Not all revenue is created equally.
That's so true. And I'm sure you get asked this question all the time, right? By aspiring founders, by students, by talent. Is like they ask VCs all the time, right? Ask VCs about what are the patterns, what's hot, what do you smell is in the air that you're excited about?
Yeah, honestly, given we're a single country strategy, Indonesia only, that's already narrow in itself. We've wiped out 70% of the companies that get started in Southeast Asia. Given the fact that we're extremely narrow on stage, I know many funds have gone multi-stage strategy, which, I support it. I think that's great. But I think that there's an underappreciation for kind of knowing where you stand in society. If you want to play growth against the global big boys, run a couple funds successfully and like get that brand and start. I think we know where we sit. Series A, I'm not going to get in front of me zone with a lot of my friends that have deployed capital with me that are global players that are stepping into Southeast Asia, writing their Series B checks. I think a handful of funds will make it across the chasm and win. I applaud them, but I think I'm much of a more of a believer in baby steps, crawl before you can walk and run. And when you can run, then go to the Olympics. But I'm skeptical. A lot of managers realize that the AUM game is very attractive, but I think it can really, really backfire in that you raise the capital, you might not be able to deploy it. Like, what are you going to offer a founder when they can choose that global brand name that can offer those global insights? So if you ask me what's hot, we're so narrow as a geography, we're so narrow as a stage. In terms of hot, I view it like an industry. I describe it as the venture ecosystem ripples. So 2011 to 2016, I don't need to tell you, every major ecosystem released Internet 1.0, a lot of general marketplaces called Gojek, Traveloka, Tokopedia. I do feel 2017 to 2020, when Intudo came online, really got into the market. We did see more picks and shovel businesses call payment gateways. Look at Xendit, is performing incredibly in the payment gateway space where, our numbers have just rebounded incredibly. It's not an open secret doing, billions of dollars processing kind of, if you will. I would say the last independent rails in Indonesia. I think that's done incredibly well. I think our undisputed category, we're in insurance with PasarPolis, where not a secret, we're doing 11% of Indonesia has bought policies with us, where we do 75 million policies a day, where we just announced publicly IFC coming on board to support us. Historically, we had Gojek, Traveloka, Tokopedia, where incredible distribution partners. now with Xiaomi on board as well, doing, Xiaomi's screens. I think insurance. But if you're to say like new companies, like, oh, because payment gateway and insurance, I'm going to go back and seed company. No way. I mean, the game's won already, right? It's like me saying ride hail's hot. No, the game's over. It's called Gojek. You say, travel, the game's over. So I do feel 2011 to 2016 was what I call Internet 1.0. I think 2017 to 2020 was really a lot of, if you call ancillary and picks and shovel businesses, right? Where, we're selling the weaponry, kind of like TSMC, where without TMC, there's no NVIDIA can't ship, Apple can't ship. So we love those businesses, call it Xendit. We love PasarPolis, where it was distribution on insurance, where of course, now that we've raised this capital, do we ultimately, underwrite policies or co-underwrite? Yes, absolutely. But I don't like business, to be frank, that if you will I don't like the word disrupt. I would argue all our businesses really more complement and really pair hand in hand with those, call it 50 to 100 top conglomerates in Indonesia, 25 of which are LPs in our fund, where we work hand in hand. And really those companies, those conglomerates, if you will, 2017, 18, 19, digitization, nice to have. I'd argue after COVID, it's become a must-have, and it's these second, third generation owners that have been tasked by their mom, dad, or uncle with, if you will, what do you call it, digitizing your family-owned platform, which really was damaged in the downturn. So I think 2017 to 2020 was really a lot of picks and shovel business to support these internet businesses. So that's not just in payments, that's in insurance, that's also in what do you call it logistics. In our portfolio, certainly we have Kargo. That's one of the market leaders in trucking logistics. We're really excited by. So logistics. Also, we certainly have seen after the more Internet 1.0 e-commerce, call it ride hail. I think we've seen the advent of a lot of digitalization of a lot of old line industries, you will, like where I would argue we have the category winner, undisputed category in TaniHub, where, we've grown top line over 10x year over year, astronomical numbers. We certainly have seen that in health where Halodoc, where, today we're doing, kid you not, 10% of the country, if not more, is using our product to, do telehealth, where, Bill Gates has come on investment, big investors like, Gojek, as well as, GDP, which is the Hartono family, as well as, of course, Prudential and Allianz. So we do third-party administration of claims. So I do think 2016 to 2020 was the advent of digitizing kind of old line businesses, is what I described, more vertical focus. So day one was more general marketplaces. 11 to 16, 17 to 20 was digitizing industries, if you will, insurance like PasarPolis, health like Halodoc, agriculture like call it TaniHub, kind of etc. Logistics like Kargo, we're 6, maybe your portfolio company Logically, right? And so that's what we're seeing. I think that next ripple, if you will, is called 2021 onwards. Maybe we'll see that next generation of companies that will continue in every step of the way. There's this, if you will, picks and shovel business that maybe tangentially are related to the original Internet 1.0, then the digitization 2.0, then call it the 3.0 of Indonesia, if you will, is kind of how we envision it. So I don't believe in the concept hot sectors. I mean, this is a play from many, talented investors, like Peter and other folks, where they really talk about it's not that trends make companies. It's certainly the companies that make trends in our view. And that's not my, unique methodology. It's more just taking from, a lot of, really smart people that I've been adopting from. And not to say past performance indicates future success, but at least I think a mental model is important. And that's what we built in Intudo, where I think at Series A, yes, TAM important. We always try to invest in the best, if like tied where we run everything through the channel, bottoms up analysis. Similarly at Series B, bottoms up, but a little bit of top down analysis, because TAM is important, although you can go to tangential markets. And then at Pre-A, very reluctant to get in bed with businesses that are extremely TAM driven sectors, and that we're just not smart enough. If we have the ability to really write a check at a later round and like control round, where I feel we do, at least at Series A, if not Series B, I'm very upfront with the founders that, we're not smart enough to make that decision. And we're very open-minded about paying a lot higher valuation. And we hope the founders prove us wrong in most cases.
There's so much of it. I mean, I think the last bit about what you said about 1.0, 2.0, and then now I think we're seeing the emergence of startups that are building upon those achievements, right? The systems and structures built by these 1.0, 2.0 startups is going to be what's really interesting. And that's where a lot of these inflection points are showing up everywhere on these different sectors.
Also, real quick, I'm really encouraged that I think a lot of investors, at least in Asia, have really talking about the consumer story. And what I'm most excited by, if I look in our kind of our pre-A or even A, a lot of our companies are B2B2C, at least in call it Internet 1.0 and then 2017. But I'm very encouraged since 2018, a lot of my businesses are B2B2C, if not now B2B businesses with very strong margin integrity, call it 80% margins, where a lot of these marketplace businesses, like kid you not, are like 5% monetization, which is really, really disappointing until you layer in, of course, the interest piece.
Yeah, very true. Well, I wish we could go in for another hour and dig into this. But I think wrapping things up here for so many of the listeners, obviously they range from the experience who are founders and investors and executives. But let's think about the next generation, right? Because I think that's why we focus on the tech people, the sea turtles, the students, the people who are starting to wrap their head around this wonderful thing called technology and everything you can do for Indonesia. I'm just kind of curious, what advice would you give to someone at college right now, right? And they're just trying to figure out a career, they're trying to think about whether they should go back to Indonesia, or whether they should stay in Indonesia, whether they should travel out, what they should do with their life, how much risk to take. What advice would you give them from Eddy to the person, as if, we were around a dinner table?
No, I really appreciate that. And like, this is a very long conversation, so I'll have to try to be concise. In fact, yesterday, I got a message from a young lady at USC, Indonesian woman that wanted to do an interview for her course on entrepreneurship as well as track. So I do think that the most exciting thing, at least for me, is really to work with folks in college. A lot of people go like, how do you have the time to do that? And I really think we got to invest in the talent, and whether it be Intudo or the next generation. And my number one line, I think I call it the two H's. I really think that we're really looking to get involved and work with people that are very humble and very hungry. And when I say humble / humility. So I'd encourage all young people. I think people really appreciate that you don't need to know everything, and it's really okay to say that you don't know, and to really be comfortable asking for that advice. I think back to my career, not to say I've achieved a lot, but everything that I've ever gotten really is a function of just somebody blindly, for some unbeknownst reason, just giving me a chance. And I think to get that chance is you got to be hungry, but never to the detriment of other people. Like, I'm not saying go to the library and steal rip out pages and to the detriment of others. Really show humility and know what you know and what you don't know, and be comfortable not knowing and going in kind of the unknown, if you will. At least if you go left, I always like to say, and it's not correct in your path, as long as it's a lightweight left, you can always go right and course correct. But if you stand there idle, you're just going to die on the mountain. So I always have the view, it's all about momentum and just trying. And the world's not static. I mean, when you think you're really hot, you're probably not that hot. And that's a mistake I make, my founders make and everything. When it's bad, it's really not that bad. And it's really about trying to adopt that even keel. And the human mind is not built that way. At least I think a lot of the best people are, you may say they're autistic, but you know what? They're even keel and they make very calm decisions. I can't say I do that all the time. I've been training and trying to improve. So I think for any young person, it's just really be open to asking and really be very humble, be very hungry to learn, be open-minded. It's not my path, I never thought I started doing investing because I was in the right place. I did banking, I did law, then I was a founder, and then it brought me back full circle. But be open-minded and try a lot of things. When you're really young, I always say when I meet a young person, if they know what they're going to do, it actually makes me even more nervous. I think that they just haven't really given a chance. And I would encourage you, if you do have summer internships, maybe split it and do two. A lot of college students, if anyone hears this, they're welcome to reach out to me. Intudo takes quite a number of interns. Most of our interns, we try to allow them to split so they can work with half the summer with our portfolio company as well as with Intudo. The number one line is that if you're a super talented Indonesian friend and you want to get exposure to Southeast Asia or Indonesia, I strongly encourage you to reach out directly to myself. I don't have an admin, or no one on our team has an admin. Intudo Ventures, people say hey man, what's your team? And I'm like, it's 6 associates right there. Hey, other teams in the market have more admins than your whole investment team. I was like, that's right. When you scheduled me, you scheduled me. So yeah, so I'd encourage you, anyone write me an email, rest assured I'll get back to you.
Awesome. Well, if you want to continue this conversation, go to jeremyhow.com. There'll be a discussion thread about this podcast episode. The details of how to reach Eddy will also be on the website. But for those who just want to hear and listening, how can they reach you? Be LinkedIn, Twitter, email? How do you want to share it?
My recommendation would certainly feel free to add me on LinkedIn. Generally, if you could write maybe a notation, add 1 or 2 sentences of context, just so I know it's a real person. And otherwise, you're welcome to reach out to me via email. It's just Eddy, EDDY, at Intudo, INTUDO, VC.com. And certainly reference my dear friend Jeremy's podcast. And my commitment to you will certainly be back in touch.
Awesome. Thank you so much, Eddy. It's an absolute pleasure. And I just want to say I admire the 3 things that you really said that really kind of encapsulated it. It's Indonesia as a market by itself and the depth of your understanding there. And then secondly, of course, is your understanding of what it takes to win as a startup, but also as a VC, and how your approach is different and how it appeals to different people, especially founders. And then thirdly, I think you have a crystal clear idea about what talent needs to think about and be aware of before coming home or before they set off their career in technology. So thank you so much, Eddy.